Well, good morning, everyone. It is Saturday morning, November 12th, 2022. My name is Bruce. I'm with Fleet Capital Management, as most of you know. And we're going to take a look at the markets today. What happened this past week? It was certainly a wild week. And we'll take a look at that, take a look at a couple of stocks that we're in. And then before the close, I'm going to tell you about some new technology that I have just recently purchased that I think is going to make a significant difference, a significant benefit. It may take a month or two, but it's very powerful new technology that is available to us. Still have the COVID cough. Was at the doctor yesterday. He gave me a medicine that he promised me, he guaranteed me without any question is going to solve this. And he said I'll be able to live a normal life without coughing my brains out. So, as always, we need to mention that this video is intended for educational purposes only. Discussion of any security is not a recommendation to purchase or sell the security. Excuse me, hot tea. Please subscribe to the channel if you like this information. And as always, you can always reach me, Bruce, at fleetcapitalmanagement.com. Our homepage of our website, fleetcapitalmanagement.com, lots of information, but I'll point out that you can always click this button to have an easy way to get to our most recent market analysis videos. We try to get one of these out every Friday or Saturday morning. Usually it's Friday. And if you need to schedule a video call with me so we can talk about anything financial, anything about your account, please feel free to just click that button and you will be taken right to my calendar. I want to mention something that some people forget, and it is this. All bear markets end. They all end. Just look back through history. When we're in them, it feels like it's never going to end. It feels like the market, when it's going down, is always going to go down. Conversely, sometimes regularly, when the market's going up, we feel like it's always going to go up. And neither of those things are true. They go through cycles. We go through bull markets and bear markets. Usually bull markets last a much longer period of time than bear markets. This has been a tough one. 2022 has been a very tough year and a very tough bear market. Is it over? I'm not sure, but I believe it is. But I always say, let's see what the charts have to tell us. So I'm going to scroll over a couple of computer screens here, and we're going to go to this is my daily market analysis that I do every day, after the market closes. And I have a number of different indicators across the top. Some of them are very, very short term, like the wave is probably the shortest term indicator I have. Some of them are based on moving averages, and others are based on more complex formulas, but they all give me a vision of what is taking place in the market on any given day. And on Friday, yesterday, the 10th, you can see that almost every single indicator was up, except for one, which is the slowest, longest term indicator. Excuse my cough. So things are looking really good, but are we done? Is this a full-on bull market? Not yet, but it looks like that could happen. So let's go over to this chart. This is go, no-go charting, which I love and I use all the time. Remember, they're bars, and I'm always looking at the S&P 500 on a daily basis. So you never have to question that, because that's how I do my trend analysis. The bars are colored. Remember that this light teal, if you will, I'm a little bit colorblind, but this light teal is the beginnings of a bull market, or what we call a weak bull market. The darker blue is a stronger trend. I shouldn't say bull market, I should say bullish trend. And then weaker bull trend, and then we go into the amber. Excuse me, that's the thing. The amber color is the go fish bar, which is we could be seeing a transition, which we saw here. Sometimes we see a transition and it goes into a different trend, like this downtrend. Sometimes we go into this color and it's just a pause, and then the bull or the trend resumes. And remember, light pink is weak downtrend, dark pink or purple is strong downtrend. So where are we now? Well, let's drag this chart over a little bit. Here's Friday, here's Thursday. Thursday was obviously a magical day, one of the biggest days that the market has seen in quite some time. And that was because the CPI number came out early in the morning, and it was less than expected for most people. It actually wasn't less than expected for me, because I've been expecting this for about 2 months. I've been seeing softening in inflation for 2 months. Does that mean inflation is not still high? No, inflation is far too high. But we're looking for trends, and I've been seeing that trend come down, and the overall market saw it on Thursday morning, and we exploded to the upside. I think the Dow was up 1,200 points. I mean, this bar doesn't even realize the magnitude of it. So we were in kind of the beginnings of a weak trend. We went to a stronger trend and then a weaker trend, and then we exploded to the upside. And what that green dot means is we got momentum off of the zero line, and momentum came up. And there's a phrase I like to use, and I've shared it with you many, many times, which is price follows momentum. When we have a momentum explosion, price is going to go up. That's just what happens. When we have momentum go to the downside, price is going to come down. Price will follow momentum. So here's our last week. We had a couple of days that were, they were fine. They were bouncing around, and then we got this explosion to the upside. This red dashed line is an important line because that's the 50-day moving average. And I've been saying for some time, we need to breach above and hold above that 50-day moving average. We went above it last week, but then we failed. We've gone above it now, much stronger and in a stronger bullish trend. And I suspect that it's going to hold this time. I suspect it's going to hold this time. But again, we never know what the next day brings, because on the right side of the chart, we have blank space. We don't know what next week will bring. This line up here is the 200-day moving average. Now, remember, back in July, I believe it was, we had a really strong push to the upside. We broke clearly through the 50-day moving average. We went right up to the 200-day moving average and failed. And that happens. These are powerful moving averages that all of the major institutions worldwide look at. And that's why they act as support and resistance with such veracity. We need to get prices above the 200-day moving average. Normally what happens, just so you know, is we break above an average like that. We come back down, we test it, make sure it's going to hold. It was resistance and now is support. And then we move higher. I believe that once that happens, the bull market has officially ended. But from a technical standpoint, I meant to say the bear market ended. The bear market ends and a bull market starts when the 50-day moving average crosses above the 200-day moving average. That's called a golden cross. And that, from a technical standpoint, says that the bear market is over. Back over here in March, when the 50-day crossed below the 200-day, that was the technical indicator that said we are now in a bear market, and we need to see the reverse to get out of a bear market. So I love what I'm seeing here. I love that Friday we had a strong day after such an explosive day. I didn't actually expect this. I expected it to pull back a little bit, maybe halfway the distance of that bar. But the fact that Friday was up even after Thursday's 1,200 point on the Dow up is, I believe, significant. I believe that the buyers are coming back. There's that 200-day. We need to bust through it. Sometimes it takes 2 or 3 chances to bust through it. So that's the go, no-go system. Let's take a look at another one of my trend market timing indicators. This is the only one that is not using the S&P 500. This is using what they call a composite of 9,100 stocks. So this is the entirety of the market. They just feel, this company feels that that's the best way to look at it. But you can see we had some resistance here. We had a hard time bouncing around within those two, and then we broke through it, and that's great. And here's that 50-day moving average. So we've broken above that, and that's fabulous. They're showing, based on their research, that we have 2 more levels of resistance. One of them is basically the 200-day moving average. and that we need to get prices above these two areas of resistance. And then we have what we call clear skies. There's nothing above it to act as resistance. I won't go through each one of these, but these are 4 different major indicators that build this trend analysis. This is called the DPO, or the detrended price oscillator. We have their buy to sell ratio, MTI, which is a combination of signals that this company uses, and RT, relative timing. All of them are either at or breaking above their zero line. Very bullish indication. It's not 100%, but this is a very bullish indication, and that looks really good. One other piece that we'll look at before we go to individual stocks. This is my ATR levels, which I always talk about, that I believe in very strongly. I use these for stop management. This, again, is the S&P 500. We've broken above the 50-day moving average, which on this chart is kind of that gold dashed line. This horizontal line is the 3,900 level on the S&P 500. That level has proven to be very, very important for the S&P 500. And it was a level that we needed to finally break through. See how we came up to it and then failed? We've done that a number of times. It has acted as both resistance to the upside. August or July, I think it was, we broke above, it came back down. Look how, remember, it was resistance and now it was support. And then it broke through support and now it's resistance again, and we have broken above it. So this was just an important technical level. We are above it, and then there's that 200-day moving average of prices. We're not that far away, but we need to get above it, come back and test it, make sure it goes from resistance to support, and then we have blue skies and we'll be doing great. Right now, based on these indicators, we have a full bullish ATR, the 2 lighter dots, one above the other. This is the DMI, the Directional Movement Index. I always want to see that green above the red, and we see this starting to turn and come up. Again, I won't go into every detail, but this is called the ADX, and if that ADX crosses above that red DMI line, that is a very powerful bullish signal. It hasn't happened yet, but if it does, and I suspect it will, that will be a very powerful bullish signal. We have the RSI. You might be able to see that faint dashed line. That's at the 55 level of the RSI. And what I have found through my career is if the RSI, which is relative strength, can stay above that 55 level for about 5 days, that again is a powerful level of bullishness. This is the TSI, or the True Strength Index. It's staying above its zero line. That's positive. So pretty much everything I'm seeing is pretty positive. I'm happy with what I'm seeing. I don't know what tomorrow holds or what Monday holds, but I'm happy with what I'm seeing. We got to get through this resistance, and if we do, I'm going to be very, very confident that way back here in June, this was the date, June 17th. I've got that little arrow there that I suggested. I believed that was going to be the bear market low. Did we go just slightly lower than it, just for just a drop? Yeah, we did, and that's normal. But we didn't really create a new downtrend. I think that's the low and that this market's going higher. But that's just what I'm seeing on the chart. We'll see what the chart tells us. I wanted to bring up Iridium for a second, because that was a stock that we held. And it was doing incredibly well. And I was shocked, actually, that on Friday we got stopped out of it. You can see that it was just growing, growing, growing. I mean, it had a really nice, we had only been in it for a short while. And those are those green ATR dots. And I had our stop right there, right under that row of ATR dots, which has always been a very, very good area to have a stop. It gives the price plenty of room to wiggle around. But on Friday, you can see this huge red bar. On Friday, Iridium dropped almost 7%. And I immediately go to all of the news wires to see if something happened. And I found nothing which suggests to me, because there's always a reason, that some major institution, either a mutual fund or insurance company or some institution that buys tens of millions of shares or hundreds of millions of shares, decided that they had had enough. Maybe they had owned it for a very long time. Who knows? Maybe they owned that stock since, way down here, and they had their target profit, but someone sold a significant amount of stock, and it caused us to stop out. Now, will Iridium then turn the corner and come back up? It could. It could. Buyers may come in at this level, but we have to have a line in the sand. We have to have rules, and we got stopped out. The nice thing is, from our purchase date, we were only down 2%. So we had only owned 3% of our portfolio was in Iridium. So 3% was in Iridium. We lost 2% of our value because we were stopped out. But that's 2% not of our portfolio. It's 2% of the 3%. So it's pretty minuscule. It probably affected the overall portfolio return, I'm guessing now, but I would say about 0.2% maybe. So that's what happened with Iridium. I was sad to see it go, but it's gone. Let me show you a new platform that I'm not ready to really talk about too much. I've got to find it, so bear with me one second here. There it is. Okay. So this is a new platform that you're going to start seeing in the future. It's called TrendSpider, and it does a lot of analysis. I'm going to talk to you about this sometime in the next few weeks. It's an extraordinarily powerful platform. But since I'm on the S&P 500, I'll just show you that this line here, that's almost a 200, but this is a trend line. You can see in the long term, we're still in a downtrend, okay? But you can see in the short term, by these two lines, we're forming a short-term bull trend. Short-term, that's why on my emails it says trend analysis, short-term bullish, long-term bearish. This in part is why. But once we get through that 200 and we break this upper trend line, which is almost exactly where the 200 is, but 200 might be a little bit below it, then these lines are going to be broken and they're going to start a new longer-term uptrend. We're just not there yet. But and then these little circles are automatic. They show me when we have broken an important trend line. So there's an enormous amount of stuff this platform does. One of the things that it does that is really cool is I always have on my chart, I'm going to make this larger for a second, the seasonality. And I have this, I can choose any date I want, but I went back 5 years. And I can see this is just the S&P 500, and it's looking at every single month, and it's looking at what percentage of the time did the S&P 500 close above zero. That meaning it was a positive month. And what you will see, we're here in November, is that 83% of the time in the last 5 years, the S&P closed higher, and 80% of the time, the S&P closed higher in December. So this is a really strong seasonality. And I have this for every stock, for everything we look at. And I'll be showing you more and more of this. We've taken seasonality to a whole new level, which is pretty fantastic. The other thing that I'll show you that this is the new platform does is here is PACCAR. This is one of the stocks that we own in our portfolio that's doing very, very well. What you'll see here is we have kind of a longer-term uptrend and a short-term bullish trend for Iridium. But what I want you to focus on, and again, I'm not going to spend a lot of time on it right now, is I update this colored part of the graph at the end of every day. This shows we entered the stock on October 21st. And you will notice that our current stop level is above our entry price. We are actually 1.73% above our entry price on our stop management. So when I tell you about a no-lose trade, even if this price comes back down to our stop, we'll be stopped out and we'll make 1 3/4 point. Pretty much every day, not pretty much every day, I look at my stop levels and I raise them based on ATR levels. So let me go back to ATR levels for a second. And if I go to PACCAR, which is right here, you can see that there's our stop level. And again, I usually choose an area that is 2 ATRs back. It's above this 8-day moving average. I'm just looking for very sensible areas that could act as support. If on Monday the price goes up and we have a new ATR dot, I'm then going to raise this stop up to here. So we'll have a new raised stop. And I can even go to our order book, highlight PACCAR, and you will see how many times I've already raised the stop. We're at 97.83, and I did that on 11/11 at 3:10 in the afternoon when the market closed. So the point is, every time that changes, we will continue to raise our stop. Let me go back here. I'm sorry about that. I hit the wrong button. When you have this many computers open, it gets confusing, but I will continue to raise our stop. And on the new piece of software, I'll continue to raise the stop, and it will show us how much we would make if we were stopped out. This green area is much more arbitrary. I choose a 20% target. It's just an arbitrary number. It doesn't really mean anything, but you have to put a target. And I chose to put the target up here, right near this trend line. So this is really cool that every day we'll be able to see. Obviously, the goal is to get our stop above our cost. If I go to DIA, which is our Dow Jones, you can see that our stop is only 0.15% below our entry. Pretty interesting. So it's not going to take much for us to get that into a no-risk trade. If I go into the Qs, you will see that our stop, because we just went into this a few days ago, our stop is 6.5% below our entry. So as we keep raising our stop, which I suspect this is going to keep happening, I really do. I'm seeing a lot of strength on the Qs. There was a lot of weakness, and now I'm seeing a lot of strength. Hopefully we'll get this stop level above our entry, and then we will just keep riding it up as long as we possibly can. So that's how the stop works. Let me see. XLE, another good example. We've been in this one much longer. We went in, this is our oil trade. We went into this early in October, and what you can see is our stop level is 7.5% above our entry level, because we just keep raising these stops. We've raised these stops so many times. And that's the goal. Will I sell it when it hits 20%? No, but I want to see where we are. And right now we're up about 14%, but our stop level is, down here. So hope that helps. There's so much I'm going to show you about this platform that is absolutely fantastic. If I take seasonality on this one stock, go back to seasonality for a second. Again, I'm looking at the last 5 years. Here's November. I can tell you that in November, the energy sector has had positive gains 67% of the time. In December, it has been positive 80% of the time. So, and in January, which makes sense because we're in winter. In the summer, it doesn't work very well. So we have lots of new tools, so many, there's no way I can describe them all right now, but you're going to start to learn about these because these are powerful, powerful tools, and I think they're going to help enhance returns in a significant way. So that's what I wanted to show you today. Hope I didn't go too long, but there's all kinds of stuff that I wanted to show you. Just remember that all bear markets end. I don't know if this one has ended. I believe it has. And we will go from there. If you have any questions or concerns, just click on that button on the website and schedule a Zoom meeting or send me an email. I think our short-term future looks very, very bright for our accounts making back money that it lost throughout 2022. I think the rest of 2022 is going to be, this is my guess based on what I'm seeing on the charts, should be very positive for us. I think going into 2023 should be very, very positive for us. And I want to do everything I can to make sure we're taking advantage of that. So again, if you have any questions, let me know and have a wonderful weekend. I'll be back with you early Monday morning. Bye-bye.